What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. We'll be doing some current events here shortly before too long. I want to start actually picking out some events that I feel are impactful to the economy and start actually reporting on those here shortly as well. I do provide daily content on Twitter. If you follow me at Hemi137, I do give daily voice messages on what I'm seeing in the market as far as how the market looks and kind of where we're headed for that day. So that sounds like something you're interested in. Again, consider subscribing. Go ahead and drop a like, and we can get right into it today. Again, something I've talked about to this point is there is not a lot going on in general as of right now. Um, this past week we didn't have a lot going on. There's some really interesting information essentially gauging more towards the tensions between the US and China, but ultimately understand that this coming week we do have the core, and that's going to be extremely important. Then we have monetary policy, which at this point I don't think is really going to be that impactful. We're ultimately waiting for the next earnings cycle. If you haven't noticed, when we get in a new earnings cycle, it's normally those first couple weeks when the banks start kicking off earnings, which is roughly around October 15th or so, October 12th. And then once the banks start kicking off earnings, essentially you have about those 4 weeks. So you have about a month span where you get all the industry leaders in that month. And then after that, the market's pretty much made up its decision from that point. So being said, and around that time is when you're getting the information that is really necessary to really see where the market is at. And then anything outside of that, it goes back to just your regular scheduled programs. So you're really looking at the economic schedule at that point, kind of seeing what new data drops. If there's anything new, we're starting to see a lot of reflection. Again, seeing more and more reflections, more and more hints that we are, if not already in a recession, we are definitely starting a recession. So again, I believe we're in a recession. You're not going to get official word until after we hit the recovery mode. Will they tell you that we've been in a recession or a depression at this point? I believe we're actually in a global depression at this point just because of the way things are currently set up. That inflation is something that's still remaining to be an issue. And when I start talking about the core, we can get more into that. But let's recap last week first. Again, some there wasn't a lot of information that came out last week, but there was some really good information. One being, I've already talked about China the week previous. Their economy is getting absolutely obliterated over there, and they're doing whatever they can to bring back that demand. And something I've talked about. You'll get to a stage once we actually start cutting. At that point, things are already really bad, but at that point you're waiting for demand to come back and you do everything that you can for demand to come back. We have to understand these interest rates are so overshot that it absolutely obliterates the consumer. And so the consumer needs to build that confidence back. How long will it take for that consumer to build that confidence back to be able to come back and start spending freely again? And understand that as of right now, China is at that stage. We will eventually get to that stage as well, but ultimately understand they are currently facing that. And understand that Germany has been facing the same issues as well. They've already declared themselves as being in a recession, and understand that it takes a couple months before it catches up. Kind of like when we talked about the pandemic and how that happened. Essentially, it took months. We knew about it, and then months later, it actually had an impact on our economy. It's the same kind of setup here, as we know what's happening around the world. We're seeing China crash. We're seeing Germany go through all the recession, all the problems that they're having. It's going to be a couple months before it actually has an impact on us, but it will impact us. And so over the past week, in building into the tensions with China and the US, China essentially announced the ban of iPhones for government-backed agencies and companies. And so it started, I believe, on Tuesday, and then they extended that out on Wednesday. So now you're building more and more tension. This is why Tesla and Apple essentially were start looking outside of factories. I believe it was about a year ago now, outside of China because of this fact. Now the tensions are here. It's making an impact. Apple actually started selling off when this ban came out. especially because they had 2 days in a row where they talked about extending the ban. Now there's whispers of potentially not even having any kind of Apple products, which would be detrimental to Apple and absolutely crush it. Then again, you have to understand the percentage that the weight that it holds in the index that Apple has. So if Apple gets absolutely wrecked, it's going to bring down, it's going to put a lot of sell pressure back on the stock market moving forward. So that was very insightful this week, especially going forward, especially with what's going on in China. And then also this weekend, we do have the G20 summit going on as I am making this video. And essentially, China is a no-show um, for the G20 summits. And so that is a huge problem, right? Putin did show up, but Biden is there, but China is not there. So keep that in mind. So the tensions are building and building. And again, will not be surprised if we're the next ones to essentially go to war. And ultimately understand, too, something I've talked about or something I've mentioned before, is a lot of times you like during the Cold War, you play these mind games all the time. And I think that's what we're seeing with the NVIDIA and chips and the whole AI push. Because of the fact that Taiwan reported this past week, they were way down. I think it was roughly like around 25%, 28%, something like that on earnings, right? And you have to understand that there was a big tension with everything going on in Taiwan because of the semiconductors there, and understand that people are trying to get these chips, so because AI is the new hotness right now, and it will be in the future. And this is why these corporations are investing heavily in AI, because they understand the impact it could have. But they need the infrastructure first. This year's infrastructure. This is why NVIDIA is doing so well. But ultimately, there has been rumors and whispers that there's some shady stuff going on with NVIDIA. I don't know if it's true, but ultimately understand that I do think to some extent it is true what NVIDIA is doing, because you need the infrastructure there. But also on the same token, there could be a lot of pencil whipping like we've been seeing, so that it's intimidating to China to think that China is behind. And so again, you play these mind games when you are going into war. And so that could play into a lot of these different things that we're seeing as well, especially with the amount of tension that we're getting from China as of right now. So we'll continue to monitor that. Again, that's not I think that will continue to be ongoing into next year. So just keep mindful of that. Now, being said, mortgage demands falls 28% over the last year. It's its lowest since 1996. Again, to purchase a home or to even essentially be qualified for a home now is absolutely absurd. So much so that they're dropping. We talked about the 1% down on mortgage loans. Essentially, that they are doing whatever they can to keep that cash flow going, because interest rates are so high. They still need that cash rate, the money flow for these banks, or else they're going to be in trouble, right? And so this is, again, putting a lot of stress on the banks. And then something I've always talked about, it has a cascading effect. If more regional banks go under, the regional banks affect your small business, which in turn, it's roughly around 60%, I believe, for all of employment is through small business. So if that does start affecting, which it will, because interest rates are still high and will remain high for a while, that you're going to see that impact moving forward. So being said, couple little tidbits over this past week, but really, really insightful in what's actually going on. So those are very key aspects to watch. Now, core is going to matter this week. They are starting to show that essentially services are coming down. So essentially headline inflation, they are seeing actually coming down, but they are seeing core inflation actually increasing. So this is the whole cause and concern that we talked about. They are expecting it to go up, and this is the tool they're playing with. Is no longer seasonal. We're seeing gas start to shoot back up as well. So this is a huge problem that we're having. If inflation starts creeping back up, again, that is going to be a huge problem. If it starts rolling back into the 4s and 5s and potentially even new highs, you're going to absolutely wreck tech. And tech is what's been holding up. The Russell is still absolutely obliterated. So that is a huge concern there. But again, we're going to have to see moving forward what exactly we'll get for core, and that's on Wednesday at 8:30. I do have core PPI. Again, it will maybe sway the market more so in whatever direction. If they both fall in line, if inflation is high and core PPI fall in line with that, then you can get more of an impact. If they're one off from one another, then that's just going to confuse the market. Ultimately, the thing that's going to have the most weight is the core CPI. PPI doesn't have as much weight, but can essentially play more into if they fall in line together, the core and the core CPI and the core PPI. So we'll see what happens there. Monetary policy isn't until we have core this week, but monetary policy isn't until next week. Again, it'll be interesting to see. Right now, we're still looking at a pause. But if that core gets out of hand, something I talked about, if inflation starts coming back and creeping back, it's going to be the headline of everything again. And you're going to reset the clock, and you're going to have to start increasing rates even more, which puts more pressure on the banks, more pressure on businesses, more pressure on everybody's wallet. So these are the things that we need to be watching. Core will be starting it off. Again, if it falls in line, isn't too high, I don't expect much there. It might cause some selling off in the index. As you can see, the index has popped up a little bit from last week, but still lower than normal. It's not a huge event, but it's big enough going into this week. So again, we still got a couple weeks away from ultimately earnings mode, and understand that these stocks are going to start running. Individual stocks will start running going into earnings mode. So keep that in mind. They normally run a couple weeks out before actual earnings reports, and then they hit a ceiling and they kind of wait there until they get earnings, and they might adjust a little bit more from that point. But ultimately, that's pretty much where we're kind of headed. So Tesla still on par, BA still on par. BA got some bad news this week as well, and they're starting to break down. Once I bring up the charts, you can see that, and the bank's JPM is still the same. So let's take a look at the charts. Again, a lot of stuff is still very, very overextended. So to really start buying up here, I think is probably troublesome. I'm still expecting this to at least come down to 4,200 at some point. Maybe the core will start pulling us back down to that point. But if you want this thing to break out, you need to break out 4,600. We tried to do that week previous, but got rejected, and then we're kind of just seeing flat. I think the market, we didn't have enough news to push us one way or the other. I think the market still realizes we're still very overextended, but ultimately it's not willing to put on that risk until it gets some more good information. If it can't, we might just hover, might continue to chop around this part, but we'll see. Ultimately, I still would like a retest down here at the 4,200. Would lead me to believe that we'd have a stronger bull run if we could get down in the 4,200. But again, we will see. We'll see how the news plays out and go from there. But ultimately, we've had some really bad days where we've just chopped and gone sideways, which is absolutely horrible. So Bitcoin. So Bitcoin, interesting. It is still holding this 25. Again, if there's supposed to be some news about on the G20 summit about global regulation on crypto. We'll see what happens. I think the way things are set up, the way the spot ETFs, Bitcoin ETFs have been essentially postponed until next year from the SEC. I think that plays a big part into it leads me to believe that there's going to be more selling at least one more time between now and October. You do have to remember in October, people are due, student loans are due. Like people have to actually make payments on student loans. So October can be really bad. Maybe that's going to be enough to start selling us off. I think, again, that would be the dip to buy. Again, not financial advice, but that's what I'm thinking. If we can get one last leg down, hopefully price in a recession, hopefully have that event that will cause the Fed to start cutting rates. But we have to see. Again, could take some time to play out. We've had over a year so far. Could take another year and a half or so before it happens. Could take a couple months. We don't know. Could take tomorrow, or it could be one thing. We just don't know what that one event's going to be that's going to cause the Fed to start cutting. But as of right now, it has not occurred yet. So we'll see. But again, it's playing this tight range between 25 and the 32K mark. Kind of just hovering around here. These wicks down makes me believe this thing wants to go back down below the 25. We'll see. We'll see if it makes a new low. I think if we do anything below 20K, it will definitely be short lived down in that um, around that 20K mark. But again, you never know. So, but we'll see. I do want to definitely keep crypto, especially with the spot ETF coming up. Crypto is going to go absolutely berserk once that does get approved next year. So just keep that in mind. I think they got between now and March of next. This is why I'm saying they keep move up that date as far as when they expect cuts. And now they have to have the spot ETF thing approved by March, I believe, of next year. So if that's the case, I think there will be some event that's going to cause the market to price in a recession between now and March, that would get essentially allow all these corporations to buy the dip on Bitcoin before the spot ETF comes in, and then starts forcing all the institutions to start buying at that point. So you want to get in before that gets cleared. So we'll see what happens there. As far as Tesla is concerned, it is still holding really well despite everything that's going on. Did hit a 200, could be a higher low here. We'll see if we start selling off this week. Again, if we get bad core, again, your tech will be hurt first. And so kind of looking to see, it is a higher low from this point. So we'll see if this does start selling off again, making a new low. Maybe, we don't know. Again, I think the student loan thing is going to be another big impactful thing. We also got the annual budget as well coming up, that's under discussion, that could be leading to essentially the government to be closing here shortly as well, around that same time period. So we're gonna have to see what happens there. Palantir again, still holding roughly around this area. I really want it down below 12. I know there was some downgrades to 9. Like, we got a downgrade here earlier in the week. I think that what they're trying to do is get it down to 9 because people will want to buy into Palantir. So I wouldn't be surprised if they start doing some downgrades, much like they did all the upgrades, multiple upgrades to keep the market floating up. Now they're just going to start doing downgrades so they can get better position. I don't know, but we're definitely going to have to see. Apple, again, got that news, and then it absolutely got wrecked for most of the week. It did bounce here at the 171. We'll see if we can break 171. I think this thing, then your next level essentially 151, and then below that you're looking around roughly 140. So we'll see what happens there. I want to keep an eye on Apple moving forward. BA. So BA just started breaking back. I think there was something going on with the planes. I think they recalled a bunch of planes or something, I believe. There was something that happened with the orders. I don't really keep up with BA. I just use the chart, to be honest, because I don't trade BA. The stock is weird to trade, and it always catches me off guard, and a lot of people I know that are in the market. So we'll see if it can hold. If it can't break back over the 220 again, I think this thing again is going to break easily past the 193. And again, this holds a lot of weight in the index as well. So if this thing starts selling off, again, you got Apple, BA starting to sell off. Those are your two. You got your big tech, and you have your big value that are starting to sell off. So if there starts to be a lot of sell pressure, it's going to start coming from those two. And then you got JPM, which is testing that level as well. If JPM can't hold this 142, starts breaking lower, again, that's your three big industry leaders that are going to start bringing down the market in general. And if you get a bad Q3 earnings, it very well could. And it might be what we're essentially winding up to, is that October is going to be a bad month because we get a really, really bad, harsh earnings from everything, showing a recession. Maybe it's enough to expose some other information that forces the Fed's hand to start cutting. We don't know, but as of right now, we will wait and see. Just like I said, we're seeing with China, that their emergency rate cutting and everything, try to stimulate the economy, is they overshot it. And so when you overshoot it again, things are just going to start breaking, and you can't do anything, right? Because ultimately, the two big mortgage brokers, they can't make their payments anymore, and so now they're in a lot of trouble. And so they're just falling apart. And so everything just needs to normalize and fall apart. That's just part of the cycles. And so there's nothing pretty about it. And that's what happens. But again, something we're going to see at some point. We just don't know when that's going to occur. So Again, that's pretty much what we got to this point. I don't want to make this video too long. Again, there's a lot going on. There's not a lot going on right now. We have the core, which will make some big move. That's the biggest thing this week. Again, any headline news, especially out of China, is kind of what we're watching. The battle between China and Apple, I think, is the other thing to watch. And then we're just after core. Again, if it's really, really bad, that could play huge impact on the market this week. Aside from that, that's pretty much it. Once that gets done, I don't think monetary policy is going to really have much to do with anything, unless we have a big core. Then it may have some weight, but ultimately, we're still waiting for the next earnings cycle, which again I think is going to expose a lot about what's currently going on with this market and how bad it really is. So, if you did make it this far, I do appreciate you. Go ahead and drop a like, and until next time, I'll see you guys later.